Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial conditions.
Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the Chicago Board of Trade. Today is Tuesday, March 10th. A lot going on in these commodity markets, and a lot of that driven by what's going on in crude oil. The old saying back in the day used to be you get the dollar right, you get a lot of things right. But over the last week or so, it's you get crude oil right, you get a lot of things right. So that's what we're going to focus on in today's segment. As you can see, and probably well aware of, just extraordinary volatility in this crude oil market with a huge move higher on Sunday, then the reversal. And then today we saw some follow-through weakness to the downside. But I really want to zoom in on the intraday chart to show you the type of volatility that we're dealing with on the back of just random headlines that are basically unpredictable. Here midday, we started consolidating in the mid-80s. Then out of the blue, we just rolled over from about $85 to $77. So a big lower move there, about $8 in the span of just about half an hour or so, and then a snap back. So what transpired this or triggered that? A lot of this pressure on the back of Energy Secretary Chris Wright stating that the U.S. had successfully helped a tanker move through the Strait of Hormuz. And then later that post was deleted and walked back by the White House, which helped prices rally back to the upside. And then you've got headlines that Iran was looking at putting mines in the Strait of Hormuz as well. So a lot of headlines jostling prices back and forth, which creates this massive amount of volatility. And when you talk about volatility expanding and you're trading these markets, it's important to realize that it's time to shrink the position sizing. So that is a key tool to risk management, is position sizing. And CME Group has done a great job over the years creating additional products for this type of volatility. We saw it in the metals. They created the 1 ounce gold contract, the 100 ounce silver contract, both great tools for retail investors. And then a couple of years ago, they created the 100 barrel crude contract, which is great too, because prior to that, all you had was a 1,000 barrel contract. They eventually came out with the 500 barrel contract. Now they have the 100 barrel contract. So that helps position sizing for retail traders and gives some staying power and just a little bit more peace of mind when you're positioning in this volatile market, as mentioned, when you get those unpredictable headlines. So the key to risk management, note of the day, position sizing. Keep that in mind here as we enter the back half of the week, as things are surely going to be just as exciting as we started the week.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including the specific material used and distributed by Blue Line Futures LLC, shall be construed as or is in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.